Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. From our point of view, BlackRock's leaders don't seem to be in touch with reality at all. When you think about how much money it is handling, this is really scary. If you think that other countries should copy Germany's energy policies, you are either very stupid or very evil. Most people would say the second one. The end result is the same no matter what. It gets worse for the poor and better for the rich. In a system that is controlled from the top down, this happens a lot. This is where BlackRock made its biggest mistake. The asset manager thinks that centralized control is the only way to solve problems and make people rich. For the sake of economic growth, it needs to work with governments, introduce things like CBDCs, and make it harder for people to get gold. A well-known cryptocurrency analyst named Guy Turner recently revealed the shady plans that BlackRock CEO Larry Fink laid out in his yearly letter to investors. Turner says that Larry Fink has said a few things that make him nervous about retirement and future business plans. Fink says that people won't be able to pay retirement as life expectancy rises, and he suggests that they put their money in BlackRock. Turner points out that BlackRock is investing a lot of money in India, which is probably because the country's population is growing. Fink wants people to put off retirement and tells workers to put a lot of money into the stock market. Turner also told of Fink's troubling thought. He wants to control how people spend their retirement money. Larry Fink also supports using public-private partnerships to pay for infrastructure projects. This would give BlackRock power over how retirement funds are spent. Turner says this is a risky road and that Larry Fink's ideas are a big change in how people handle retirement. Turner believes that these ideas could cause big changes that could be bad for things like planning for retirement and investing. In the third part of his letter, Larry asks how people can afford to retire now that people are living longer. You should now know that the answer is to give BlackRock all of your money. Larry talks about a partnership that BlackRock has with an Indian retirement company that invests in digital infrastructure as an example. That is, BlackRock will use your retirement savings and investments to make it happen. You will be happy and have nothing to own. Also, it looks like BlackRock is putting a lot of money on India. This is likely because the country's population will be one of the last to reach its peak, which will happen in 2050. Remember. Then, for some reason, Larry changes the subject and starts talking about the US. This is likely because the reader is beginning to wonder how active BlackRock is in India. In a strange way, Larry accepts that the policies made by boomers like himself are to blame for the money problems of younger generations. As you might have guessed, BlackRock has the answer to save the next generation once more. Larry says there are 3 ways to fix our future finances. He starts by stressing that America's social security system will run out of money by 2034 and pushing for people to retire later. First, employers should make workers spend some of their pay in the stock market through asset managers like BlackRock. That's pretty cool. Larry says that next year, a similar law will go into effect in the US, requiring all employers with 401,000 plans to sign up new workers automatically. A slippery slide. This has to do with the second way BlackRock plans to fix our money problems in the future. And that's to keep track of how our retirement funds are spent. In other words, BlackRock wants you to give them money and give them the power to tell you how to spend it when you retire. This is a very real risk that has been brought up by a lot of macro analysts, not least Mike Green. As if that wasn't scary enough, Larry calls this a revolution in retirement. There is no doubt that this change is more like the one in Russia than the one in France. Even worse, Larry thinks BlackRock's plan will make people feel hopeful instead of scared. Do you still feel hopeful? There's more though. In the beginning of his letter, Larry made it sound like fixing the population problem is the third way to fix our financial future. That is, either have more kids or let more people come to the country. No, Larry only said what I just stated. Hey, that'll work, raise the age of retirement. This might have something to do with the fact that Larry thinks computers can do what people do. Yes, this is exactly what he said at a recent panel talk put on by the World Economic Forum. Lawrence writes more about the ESG-compliant infrastructure BlackRock wants to build with your retirement money in the fourth part of his letter. He starts by making a statement. Partnerships between the government and private companies, or BlackRock working with your government, are the way of the future for infrastructure. Larry says that this partnership between the government and the business sector is the only way to pay for infrastructure projects because governments have too much debt to do it on their own. He talks about how the US government's debt is rising quickly and how fewer and fewer countries are buying us government debt. I just want to quickly say that the Millennium Development Goals MDGs, which came before the SDGs, failed because they didn't have enough money. Things get really interesting now. Larry writes, As we look ahead, the re-risking of client portfolios will create tremendous prospects for both our public and private markets franchises. This seems to come out of nowhere. This is interesting because Larry said in 2023 that buyers were lowering their risk. If BlackRock is re-risking, which means going from bonds to stocks, it makes sense that they think the markets will go up this year. Once more, this statement has been right on the money. I guess that's what you'd expect, since BlackRock can tell the companies it invests in how to beat expectations. This is related to what BlackRock wants to do with the companies, whose decisions it can affect through its voting shares. As you might expect, Larry doesn't say much about this, but he does imply that BlackRock will keep pushing ESG. Larry says that ESG technology will still be important to BlackRock. When it comes to ETFs, they will keep offering new ones and making more people use them, including Bitcoin ETFs. This is important because it points to the release of more crypto ETFs, such as those for Ethereum. Now that interest rates are, quote, close to long-term standards, Larry also says that BlackRock will be focusing more on fixed income or government bonds. This is important because it shows that BlackRock thinks interest rates will stay the same, which goes against the view of people who think rates will go down. Larry brags that BlackRock's stock has gone up 90 times in the last 25 years, which is the same return that many joke coins see in a few weeks. He then says that BlackRock bought GIP, the ESG infrastructure firm mentioned above, and that its CEO, who is Larry's friend, will join BlackRock's board. When nepotism is dressed up as ESG, who needs shady capitalism? Okay, enough with the jokes. Larry ends by saying that BlackRock is just a small part of a worldwide success story. Larry thinks that this success story is helping the normal person, but it's really just helping the rich. Larry says it's all possible because of the stock markets and the people who put money into them. He doesn't say that the top 10% of people own more than 93% of all stocks. Sorry about that. Now, I get to the big question. That's what this all means for the markets and you. There is no doubt that these are not the same thing at all. From our point of view, BlackRock's leaders don't seem to be in touch with reality at all. When you think about how much money it is handling, this is really scary. If you think that other countries should copy Germany's energy policies, you are either very stupid or very evil. Most people would say the second one. The end result is the same no matter what. It gets worse for the poor and better for the rich. In a system that is controlled from the top down, this happens a lot. This is where BlackRock made its biggest mistake. The asset manager thinks that centralized control is the only way to solve problems and make people rich. In the name of economic growth, it needs to work with states to implement things like CBDCs and limit access to gold. It doesn't sound like this is what you would do to make things better and solve problems. Whatever you say sounds like something you would do to keep a Ponzi plan from going down. There are many things that states do wrong, but they don't have nearly as much debt as banks and asset managers do. A new report says that the world owes $315 trillion. However, banks and asset managers are thought to owe even more in the form of derivatives. They are backed by other assets that need to go up in value. If not, the derivatives debt bubble will pop, and that's the end of the game. BlackRock's plans all come down to the same thing when you look at them as a whole. We will decide what to do with